Give thanks every time. So in my last video, I talked about AI money apps that read you first, coaches that watch your account and tell you what to do next. But here's the part nobody says out loud. Everything those apps know about you comes from watching how you react. Every check, every click, every sell after a red week. So this week I built a free tool that flips it around. Turn the tables on them. 7 everyday moments, a red day, a hot tip, a push alert. And it names the one thing an algorithm can't actually see in your data. Whether your investing runs on your own signals or on everybody else's. It takes about 2 minutes. There's no sign up. It's all free. One of its 3 results is a winning, and one of its results is a losing, and one of its results is not. But either way, you win, because then you know, and consciousness is the first step towards progress. So, this is aimed at the most disciplined people in the room, and I'm going to show you why. So, there is a trap, and I'm going to name it for you. Every investing decision starts with a signal. Most people have never once asked where theirs come from. The market moves, your phone buzzes, a friend mentions a winner, and only then does the money question open. So, the tell isn't trading a lot. You can be reactive and rarely act. The tell is that the timing of your attention is set by events instead of by you. So, this is all about being aware of yourself. Because investing, there's basically like 2 ways that this is breaking down. And this is like the main 2 and sometimes 3, because like there can be like a mixed one too. Essentially like archetypes. And this is all about, do you react? Do you make your investments based on reactions? Or are you more of a reflective person? Or maybe you're like a mix of the 2. But either way, this is the main thing. It's not about like one makes a better investor. It's not about like changing to become something else so you become a better investor. It's about becoming aware of your traits, aware of the way you think and the way you react and the way you act. When you become aware of that and you know what kind of person you are, then this tool can give you advice based on that read on what kind of person you are. And you can become more aware, and that will let you know where your strengths and weaknesses are, and you can just get better over time. So, this is expensive information. External triggers cluster at emotional extremes. The exact moments a red day or a hot tip demands a decision are the moments feelings can be the loudest and reasoning can be the hardest. When you're looking at that green chart and you get that FOMO, when you're hearing that the stock market has gone up so much, when you're hearing that the stock market is starting to crash and it's probably just the beginning, how do you react? These are the moments. These are the most expensive moments because these are the moments that usually cause the most expensive mistakes. And that usually comes through not being aware. So it's all about raising awareness and then getting better. This is not a character flaw. Reaction is the default setting, and most financial apps are built to feed it. There's alerts, streaks, numbers that turn red on purpose. It's all about triggering you to make a decision. It's all about trying to get you to react. The news, but when do you ever hear someone on the news telling you to be patient, to take your time, to reflect before you make a decision, to meditate on a choice, to clear your mind first? I can't remember being talked to like that by any kind of news. It's all about trying to cause a reaction. So it's all about, here's the reframe. This tool is never going to ask what you invest in. It doesn't matter what you invest in. There's not one question about, do you invest in this or that? It's all about orientation, and that's about where do your signals come from, not what it points at. And the same default will follow you across every financial account you ever hold, even bank accounts, even the way you put some money in checking and some money in savings and how much you keep in there and how much you hold for a rainy day, stuff like that. So reactive or reflective is not about good or bad. There is no good or bad. It's just like, be aware of how you are wired. Be aware of like how you are as a person. I mean, if you want to change, if you feel like you're a reflective person and you want to become more reactive, that's totally your choice. But I mean, that's going to take a lot of effort. And why not just become a better version of the person you already are instead of trying to be somebody else? Think about it. So, the honest goal isn't becoming a different person, it's knowing your default. So, it's a choice instead of a reflex. So here's why I built this tool. All the research I did this week kept circling around one question. How does an AI app know what's right for you just from looking at your account history? So if you go and you download all your financial information, your bank account, your investing history, and you go and download into an app and the app tells you that, the more information you give me, the better of a read I can give you on what to do. Does that make sense to you? The honest answer to me is it doesn't. It knows what you did, but it can't know why. I mean, you can tell it why, but have you been keeping that journal so that you remember why you made every financial decision that you made? Or when you look back, do you only remember the bigger decisions? That's another thing to consider. So I kept seeing the same beginner shape in a lot of different threads. People who know plenty, whose decisions still get made by whatever showed up on their screen that day. So what I've seen, reading between the lines, the missing piece usually isn't more information or having not enough information. It's noticing who sets the timing, noticing when you make your decisions, what caused that, what triggered that decision to be made. Was it something somebody else did? Was it something that you set up ahead of time? Did you stick to a plan? Did it make you break your plan? These are all things you want to be aware of. So now I'm going to show you the tool. This is it right now. So here's the tool. I'm going to go through and answer it the way I would see it. So it's a red day. Everything's down 3%, and it's not even lunchtime. What actually happens next? For me, I would say nothing. I'm not going to make a decision just because things are down, because my portfolio is down 3%, unless it was a decision I already planned on making that day. So the phone buzzes. You got an alert from the news. Markets are moving today. And I mean, I would say like half the days it's the alerts I get try to make it seem like the markets are making a big move when it's usually just average day, hyping it up. So, usually when that happens, I do check it, but I'm not checking it to like see if I can make a move. I'm just checking it to kind of like see what happened. Like give myself like 2 minutes, check it out. Okay, I'll see what's going on. I'm like, oh, it went up like 1%. Wow, that's not really like, I feel like that's just the news hyping it up. Or like maybe something big did happen and then it's like, okay, now I want to look into this more. But most days, I check it out when I see that alert and I'm like, oh, this is nothing. It's just the regular news hype schedule trying to like make a big deal out of nothing, make it seem like, this is some big day when it's really just average. So that's me. A friend mentions a pick that's already doubled that night. I'm like, well, I guess I missed it then. I guess you're telling me about it now after it doubled. Like, you should know better than to like tell people about FOMO stuff. But yeah, I'll just run it through my own filter. If it doesn't fit what I wrote down, it's a pass. And if something's already like doubled in a short amount of time, then most likely it's going to be a pass. I would say 99% of the time, I'm like, okay, yeah, I missed it. Just find the next one. There's always going to be another one. So I missed a scheduled buy this week. Now what? Usually I would just like, if I notice it within a day, I would just make it a day late and move on. Sometimes I have it like automatically work and do it, but usually I don't because I like to take a look at the market and make my own decisions. So I don't want to like automatically buy the same thing each week. That's really boring to me and that doesn't motivate me because I understand myself and I understand how I operate. I become more conscious and more aware over time. So where does the next investing action actually come from? For me, it's always going to be something I decided earlier. I don't just react. I've been through like crashes and bull runs, and I know if I got in, I got in. If I didn't, then oh well, I just wait on the next one. If something's crashing, then hey, start doing some planning on buying. I mean, not gonna like make a flash decision that day. I've made that mistake so many times. I know I don't need to do that. So a week after a decision, how do I judge whether it was good? And it's all about whether I followed my own reasoning at the time. A week after is like, I mean, 99% of the time, nothing is going to happen a week after I make a decision. It's very rare that there's any kind of big move. If the price moved my way, it was a good call. That's kind of it, but that's more like, I feel like I can't tell that for like a year or two usually afterwards. The headline warns a recession might be coming. My first instinct, I'll just take a note of it. My plan already assumed markets drop sometimes, and I know every time the market drops a little bit, the media is trying to make it sound like it's just going to keep dropping and it's the beginning of a crash. Times I checked my portfolio yesterday, 0. Sometimes I might check it like maybe like, every other day for like, but like I'll check it for usually like 99% of the time. I check my portfolio every other day. Maybe it's for like a minute, not even less, maybe like once a week when I'm doing a buy, my like scheduled weekly buy. Maybe I'll check things out for maybe like 15 minutes and I can just look at charts in the market. And I already know because I've been staying in tune. So going over and doing this a little bit differently, how most people are going to react. And I did the research ahead of time. This is how most people react. If it's a red day, they're going to open up their app and decide whether to do something. Like, it's probably going to get worse. Maybe I should sell before I lose more. Phone buzzes. Usually people are going to check right away. Friend mentions a pick. Going to look it up. If their friend mentioned it to them, it's probably, if their friend made all that money, they better, get in and make the money too. Miss a scheduled buy. This one I don't think really matters. Where does your next investing action usually come from? A lot of people move off of the news, a price feed, a price move. So, say you check your portfolio like 3 times a day. It's going to be a mixed signal. Some of your investing runs on your own schedule. Some of it answers to the markets where most people live. The useful information isn't the total. It's which moments you answered reactively. Being aware of like what caused you to make each different decision. So this, if this is who you are, then it's going to give you the right information so you can become more aware and get better over time. That's what Stackivate is all about, getting better over time. All right, so going through that is the tool that I just built. It's free to everyone. Just go to Stackivate Tools, Reactive or Reflective, super easy to find. Go through, you can find out what style you are, and then you can get the advice that goes with whatever read that you get. And if you want to go on further, there is a quiz, an interactive quiz. It's only like 6 questions, but it will take you into another level of knowing what kind of investor archetype you have. And then you can, if you want, create an account. It will keep a database of the decisions you make, and you can get basically like a weekly read. The paid account is all about like a daily read, much more interactive, much more features, but for the most part, everything you need to get started is free on Stackivate. And I feel like you should really see some progress, just with one day of just, playing around on Stackivate, using some of the tools, and you can get an idea, knowing yourself better, what that looks like. All right, so what did that reveal? 3 different reads. All of them are honest. Reactive people, you're going to get advice instead of like telling you that you shouldn't be like that. That's what most investing, one size fits all, telling you not to be reactive. Some people want to be like that. Some people actually do better like that because they know themselves and they understand that that's where they get that excitement for investing, and that's what fires them up, and that's what really makes them sharp, and that's when they make their best decisions. So, if that's you, then like you should go with that and you should learn how to cultivate that. So, like I said, it's all about, nothing being good, nothing being bad. Nobody's told that their style is better. Everybody leaves with one specific thing to notice based on the read on who they are, how they react, how they invest. So, 2 different people can have 2 different answers, but they're both right. Someone who checks their portfolio a lot and someone who never checks, they could both be reflective. There could be, some traders who can still be reactive. Like I'm saying, the signal source is you. The behavior isn't the orientation. Everything here reflects a read on how you process investing signals. This is not financial advice, not a recommendation to buy or sell anything, not a claim that either orientation produces better results. So I would have to say 2 verdicts. They're both honest. 2 ways. They both work. Depends on what you are. My advice is go with what you are. Don't try to change yourself thinking that that's going to give you better results. It's going to be much easier to find out how you already are, how you intuitively are, how you've been wired, how your environment has shaped you, and how that makes you react. And just learn to be better with that. So, the industry is racing to read you from your data and act on what it sees. A machine watching your account really can predict your reactions, but if it decides for you, then how do you learn? How do you get better? And when the AI is wrong, is it not the one who pays? It's not. You gotta pay. If the AI gives you bad advice, you take the loss. The AI gives you good advice, you make the gain. But do you know why it was good? Do you know why it was bad? Are you going to keep trusting AI that it's going to give you the right advice every time? So the goal was never to outsource the decision. It's to become an investor who knows their own style and improves over time. This is the tool, and this is the idea in its smallest form. It doesn't tell you what to do. It shows you who's been deciding. So again, check this tool out free at stackivate.com. It's in the tools on the hamburger menu on the side. Reactive or reflective tool. There is no sign up. And if it named a poll that you recognize, like I said, go ahead, check out the archetype quiz and be honest. Which moment got you? That's what I'd like to know. Which moment, which question on the quiz really made you the most aware of something that you already did that you weren't aware of before? Is it the red days, the tips that you get, the news alerts that you get, or are you the person who needs the warnings? Are you a person that needs to see things ahead of time and reflect? Tell me below. Always looking to see how I can help and offer value, and hopefully you got some value off of what I had to tell you in this video. So ask yourself, what kind of investor are you? Be honest, and it will flow from there.